Hey, good morning, good afternoon. This is Trendy John at Simpler Trading. Let's go ahead and get started with our broad market analysis. We'll be covering this week from tonight, the 13th, for futures into the 18th of Friday. And let's go ahead and start with this week's major U.S. economic report and Fed speakers. Before we get started, please make sure you hit that like button and make sure that you share with your family and friends and anyone that may be interested in learning a methodology that helps them cut out the noise and just focus on price action. This is this week's major U.S. economic reports. Monday, tomorrow, Columbus Day holiday, bond markets are closed. And then 3 o'clock p.m. Eastern Time, Federal Reserve Governor Christopher Waller is speaking. Tuesday, State Manufacturing Survey, Fed Governor Adriana speaks. Wednesday, Import Price Index. Thursday, initial jobless claims, U.S. retail sales, industrial production, business inventories, home builder confidence index, and then Friday closing out with housing starts, building permits, and Federal Reserve Governor Christopher Waller speaks. Remember, all of these are just catalysts that I go over to ensure that you understand that these could be coming into the market and they will create some volatility in the market. But being a supply and demand trader, our focus is to identify the zones, align ourselves with the bigger money, let these catalysts in the market, push price into the supply and demand, and then we take action. The next thing that we're going to be looking at is this week's earnings. Earnings for this week is all about the banks, and you can see that starts out pretty strong here on Tuesday. We have WBA, we have United Healthcare, Citi, Bank of America, Johnson and Johnson, Charles Schwab, Goldman Sachs. A few names. I'm not too excited about this week, except for Tuesday. Alcoa looks interesting going into this week. And then Thursday, Netflix. Definitely want to keep my eyes on there, see if these guys can break out to all-time highs. But other than that, my focus is primarily on banks and a couple of the names on Tuesday and then Thursday. And then we start to get a little bit heavier on earnings coming into the next week after that, which is going to start us around the 21st of October. As a reminder for October, I will be leaving on the 23rd, but I do get back on the 26th, which is Saturday, so we'll still do our broad market analysis and still have charts ready for you guys. The next thing that I want to be looking at is diving right into the bigger picture, if you will, on the SPY. And what I like to focus on here is the quarterly chart. Each one of these candles represent a quarter. Obviously, we just got started with this current quarter, but it's looking pretty strong so far. This past week, new highs were established in the ES futures, the SPY. This means our support has come up just a tad, and our targets remain 581 to 600. Support now is around 540 into 515. Big reminder here, just in case, we get a big move because of elections or anything like that. I am a buyer down here at the quarterly cloud and or this inside and out formation here. So again, I've gone over this every single week, but just want to remind you here. Let's go ahead and go into the Qs. The Qs are a little bit different. We have not made an all-time high for this year so far, or a new high, I should say. And this past week's price hit supply for the third time in a row. I know you can't see that here, but on the weekly chart, we did hit supply, so please understand that. And prices just kind of stalled out there. If price can get over the proximal line of 493.71 and hold that, okay, for this week, things look really strong for that big breakout that I've been waiting on. I feel like for a very long time. Matter of fact, it's been quite a while. So again, for right now, we are hitting that supply. I expect a little bit of rejection. We hit it, I believe, on Friday. We pulled back from it. And again, if we can get over 493.71, then things look better to the upside. Your support for right now, again, this is on a quarterly chart, not on a smaller time frame, is down here at 465 by 441. The next chart that I want to be looking at is going to be the dollar DXY. This is important. To sum it up, make it really quick, is when the dollar is starting to bid to the upside and is looking stronger, typically the market will have a little bit harder time and you'll see sideways to down. Last week, we actually closed over the 38.2. These are just some Fibonacci's here. And you can see these levels over here. 38.2 is 102.61. So my 2 cents for this week is to stay cautious in the market because we are over 102.6. However, I wouldn't expect it to get up and over the 618. If it does, then I go from a yellow flag to a red flag. Just be careful. But in here, I think the market continues to fluctuate, basically kind of choppy until it's not. Okay. So that is the dollar. And the next thing I want to be looking at is the TNX. Overall, the TNX did the same thing. It came into our inside and up formation, our demand zone. It popped. Um, Caution is warranted. Again, we're staying above the 38.2, which is the bear channel. Same thing, almost like the dollar. I don't really expect anything if the TNX, 10-year treasury ends up going over 4.35, then things do. I go from a yellow flag to a red flag, but caution is warranted this week as long as the TNX continues to show strength here. Again, that value level on the dollar and the TNX, if we start to break down back below, so we kind of basically do something like this. Let's say we do this, and then we break down and get back under here, then I believe that the market continues to rip higher. Okay. Next thing that I want to be looking at is going into the skew. This is our hedge funds. We like to keep an eye on them. Basically, when we're reaching levels up here towards the highs, and here you want to be careful. You want to be looking at sideways to down in the market. Last week we got that. The overall, um, my bias, or not my bias, my sentiment was bullish by the dips. We did that. Overall, it was a pretty good week. Um, Not as good as a couple weeks ago, and that's okay. I kind of expected that, as we were getting higher up here on the skew, that conditions would be a little bit more difficult in some names, not all names. We had a lot of good trades, but my performance was best a couple weeks ago, and then just kind of chipping away for the last couple weeks, if you will. Okay, but if the skew is up here, I think that it does, say, hey, there's a little bit of caution. We're up here towards 160. That is pretty high relative to the overall performance of the skew. Looking at it, anytime that prices come up into this range, you want to be careful. And if we, for some reason, pull back into, for some reason, say the market pulls back and we get towards 135 to 132, this is where I want to be buying the dip pretty hard in the market. And again, just like the quarterly chart in the SPYs, I gave you that if the market were to have a big pullback because of elections, you would see the same thing here on the skew. You would actually see the skew reach these levels down here, which used to be very, very normal. But again, this is an election year. Going back, you could see we always kind of came into this area. But for this year, believe it or not, we have not been back to the normal area where you see extreme fear since, I mean, if you look at these candles in here, this was January 2023. So it's been a long time, and I can tell you this, when the skew does drop here, you're going to know it, you're going to feel it, and you're going to be super fearful. And everybody out there is going to make you feel even more fearful. But this is one of my favorite places to buy. All right. So, again, take that quarterly chart into consideration that I went over on the SPY and the Qs. Look at that 9 EMA. If for some reason in the future we hit down here, this is going to be bargain shopping, if you will, for me, the clearance rack. But for right now, in 2024, especially, we've just kind of hung in here as we're higher on the curve here. Be careful. Sideways to down is what I expect in the overall market. If you get here, look for a pop in the market. And down here, I look to buy SPY calls 5 to 10 days out, um, just according to the overall skew. All right. Next thing I'm going to be looking at is the Fear and Greed Index. This actually did not change from last week. It's still at 74. So again, it's saying that overall the market is greedy. Therefore, participants are primarily on the call side. And when participants are primarily on the call side, you look for some sort of rug pull. So again, dollar, TNX, the QQQ pushed up into supply for the third time. there's all these reasons to just say the same thing that I've said the last 2 weeks. First couple days in, the part of this week could be sideways to down. If if anything, Thursday looks the most interesting, but I do think banks have an impact. And as we're sitting here talking about this, because earnings season is upon us and we're just kind of getting into it. Remember, earnings season, my main focus is the bigger picture. Obviously, is always price, always supply and demand, but a lot of people get disoriented, if you will, into earnings season because of all the different volatility, the different names that are reporting and so forth. Just remember that from a supply and demand perspective, what I primarily want to see as we're coming into earnings season, we have a couple different looks, if you will. Let's say supply zones up here. We have our demand zone down here. If overall the market, say the ES, the Nasdaq, the RTY, the Dow Jones, if the majority of those are coming into demand, I'm looking for a bullish rally throughout earnings. And if for some reason the majority of these names that I just mentioned are up towards supply, then we want to be careful because anything tech related, for example, like the NASDAQ is pushed up into supply for the third time. If it can't get above this level, then I'm expecting a lot of the names in tech to actually pull back, not necessarily when they report, but we may get cheaper prices before their earnings. So I want to be looking for an opportunity, say in the QQQ for prices to come into lower demand zones, and I want to get long there, and then I want to ride those names into or close to their earnings. Okay, and again, we'll be talking about that a lot in the room. Next thing I want to go over is one of my favorites, and that's getting into futures. And we'll kind of end there with ES, NASDAQ, and Bitcoin. So give me 1 second as we pull up the charts here. We'll go over to the weekly chart. I didn't have to change anything here. The only thing that I would show you is, the previous week we came into the immediate support that I gave you. It worked really well. And then this past week we did make a new high, and we also came right into the immediate support, very close to the 9 EMA, and then pushed up. Everything above on the ES futures, the SPY, and so forth for right now is basically blue skies. I do not have supply zones to give you. Therefore, we're using other things such as Fibonacci extensions, and I teach that right here in the room. But not only that, but you can use the cloud to help you stay in the trend. And again, we go over this every single morning. You guys know that. So every target on this chart is actually not supply, it's Fibonacci extensions. On the daily, we did create an inside and up formation. We did get a buy signal, so we closed out on Friday with a buy. I'd expect a slight pullback. We'll see how the market opens, but a slight pullback, perhaps. And if we get that slight pullback, then I'm looking for buyers to step in if we can get at and above 58.53. If for some reason we don't pull back, that's okay. As long as we stay above 58.53, then you look for your short trigger around 59.21. Remember, this is not a blind short trigger. We go to a smaller time frame. We look at what I teach you to get short if we need to. If for some reason we have a big pullback this week, these are my trigger longs. Same thing every single week. Same thing if price comes into there, we'll be looking for our trendy turn signals and or trendy edges and lower time frame demand zones. Okay. Next thing that I want to look at is the 4 hour. You guys can see we did create a new zone. Your inside up formation there around 58.40 by 58.11. I would expect buyers to step in this area. So please note that. And if we were to break down below there, I will obviously update and be in the room with you to guide you. Okay. Next thing I want to look at is going to be the NASDAQ. And most of these charts, for the most part, they haven't especially this one hasn't done much. It came into the immediate support, the same level I gave you last week, same thing as the week before. It came into the 9 EMA, everything we teach. So to me, it was a really easy buy the dip opportunity. Price did start to push up from there. We are getting closer to the bigger time frame zone here. And you'll notice if you look very close, we didn't quite touch it yet. So this zone is fresh for right now. So please understand that. If we get into that area around 20,574, we could see a rejection. Just a little bit of caution is warranted as we move closer to there. Now, again, you got to take the overall trend into consideration when looking at supply. And right now we are making higher lows, lower highs. It is a sideways trend. So therefore, it could be a melt up situation. The big thing is just to say if price can hold above this number here, we want to stay long into the targets inside supply, which are 20,749, 20,917, and so forth. Again, this is the weekly picture. Let's go ahead and move into the daily. This is where we have our triggers. These are the same as last week. I believe they were not moved, so we're just going to keep them the same. You can see that resistance was indeed resistance, so we'll leave it there. And again, my trigger short comes in a little bit higher, around 20,802. Let's go ahead and go into the 4 hour. Same thing as the ES futures. We did create another zone here. It has been tested some, so it could come in even deeper. If for some reason we pull in deeper, we'll have levels tomorrow morning to go over with you, where I'll be looking at buying that dip. All right, and this is for tonight. I went ahead and put the ES and the Nasdaq futures chart for you guys, and you guys know how to trade this. We have the liquidity chop, we have the zones. We're looking to get long in the green. We look to basically, unless you're advanced, and we teach that in here, there's not much to do inside liquidity chop. If you're advanced, what you could look at is if we gap down into 20,370, you could look to take a quick scalp off of that to the upside as we should get some bounce. Okay. But for right now, we do have resistance coming in around the trendy edges up here around 20,465 by 20,496. Okay. And again, this zone down here has been tested. If for some reason it digs in deeper, my first go would be off this 20,295. All right. So again, those charts are in there. Let's go ahead and take a look at Bitcoin. My overall sentiment's been the same every single week. And what I want to focus on, we have hit our 2024 target. So please know that right here, we pull back from that. I keep telling you, if we can build a base above 69, then we're looking for 72 and then up here towards 86. But for right now, this is my focus. Last week, I said as long as the green held, I am bullish. We got a really nice rip on Friday. However, it stalled right inside the supply zone. Okay. Now, the overall target for this week, if we can continue to chew through this supply, is right here at around 65,468. And any value upon, above this, then look for the breakout into 67,000. If we break back down into the green box, I believe buyers step back in once again here. Just really choppy, if you will. Overall, that is my broad market analysis. I try to make it fast this week. Enjoy your weekend, enjoy Sunday, and we'll see you tomorrow morning. Have a great day.